Hi, I'm Jade Lippier at Red Fox Property Group, and today our special guest is Lee May from Advantage Flow. She is an awesome tax specialist if you're looking for someone new to talk to about your tax needs. Also does a lot in the self-managed superannuation fund sphere as well. And we had a few questions today that we wanted to cover off on, really with regards to investors getting into the market. What kind of tax benefits are there for investors?
Thanks, Jade. So the tax benefits for investors, individual investors, includes negative gearing, as we all know, but also claiming your tax deductions related to earning your rental property income. So things like interest on your loan, repairs, your rates and taxes, and also a lot of people don't know about this, but capital works and capital allowances deductions.
Yeah.
And you get that through a report that your quantity surveyor can prepare, and that gives you quite significant deductions.
Fantastic. And so are there other benefits with regards to owning an investment property depending on how you structure that purchase? For example, family trusts?
Yes, absolutely. So depending on whether you're a first-time investor or a seasoned investor, if you're more of a seasoned investor and you've got numerous investment properties and you're planning to grow that as your investment strategy, you can pop that in a trust, and a trust has tax benefits as well, distributing that income out to your family members who could be on a lower income, or you could also put it in a self-managed super fund. And in that case, you can either do a bit of borrowing against that, or you can buy it kind of outright as well.
Okay. Sounds like you need some really specialised advice, and so you're a great person to speak to. So the other question I wanted to cover off on was really just if we can explain what capital gains tax is.
Sure.
Yeah.
So capital gains tax is, in simple terms, tax on your capital gains of your property. So let's say you sell your property for $100,000 and you bought it for $30,000, you essentially get a capital gain of $70,000. And with that, you get what they call a CGT concession if you buy it in your personal name. And so there's a tax benefit around that as well.
Okay. And in the circumstance where you might inherit a property, is there capital gains tax that might apply to that?
Yes, there is, but there's a concession. So you get a 2-year period from the time you inherit the property, really essentially from the date of death of the person you inherited it from, and it's depending on when it was purchased. The value could be the market value, or it could be a historical purchase cost of the deceased, but that depends. You'll have to seek advice on that. But you essentially have a 2-year concession time frame around that before you get your capital gains tax.
So some great advice there, and if you need a tax specialist, Advantage Flow, Lee May is your person.
Thanks, Jade.
Cheers.